Okay, so let's kick off with the stock market update. It is the 6th of January. Where are we on all of this? You can see on a price earnings ratio, energy and the financials still look relatively cheap. It's probably because the profits coming out of the banks are phenomenal. The higher interest rates, just it's the way the world works, makes it that way. And similarly with the energy companies. So why aren't they just soaring and soaring? Well, to some extent they have been. And the other reason is overall market headwinds and projections for lower profits in both energy and as interest rates stabilize in banks as well. So there's a bit of hesitancy, but they're undervalued on that measure. Everything went up last week, pretty much with the exception of Microsoft, United Health, and the others, even though the undervalued ones, sort of tinkered along. So you can see that it's not valuation alone which moves the markets. Another measure of valuation is this, the price earnings growth ratio. And you really want that to be below 1. And it is mainly in just energy stocks and some of the financials as well. So again, you can see energy and financials sort of standing out there. Real estate doesn't, healthcare doesn't really either. What concerns me the most and worries me the most and keeps me risk averse at the moment is this likely 10% fall in the S&P 500. That's the S&P since January of last year, since when it started falling, and whilst it rose, it was a false dawn, then it would fall, rise, false dawn, fall, rise, false dawn. I'm probably going to drop 10%, say all the major banks, and I tend to agree with them, because that monthly MACD is still not flat, and until that's flat, you can't call a bottom on that. Everything else will just give false dawns if they start rising. Apple fell below its support. I didn't think it would. Do you see how it fell below there? Because that is still not flat. We thought it was getting flat. We really did. We thought that support would hold and this would be flat. It changed its mind. It didn't. And therefore it's fallen beneath. I'm a long-term holder, so I don't mind Apple and Microsoft because it's a 5-year thing. I'm not going to worry about them every month or even every year. Okay, but that's still falling, and until that flattens, you can't expect to call a bottom on Apple, and therefore, worst case, it'll go there. I doubt it'll probably go closer to there, and then we'll think about buying some more. Similar story with Microsoft. It's fallen, but it's still within its range. It's within this range as it has been, despite falling 40% from the beginning, but that's still falling sharply. So until that flattens, you're not going to get an end to those falls. Fundamentally sound company. Amazon, again, fell below the support. This is what can happen if it falls below the support. Was there a clue that it might? Well, we said in earlier videos that the worry was that the monthly MACD is falling and therefore that support might not hold, and indeed it didn't. You see, in the past it has held, even though the MACD has been falling, but knocked twice on that door and it didn't. It just couldn't. So we are with that one. Meta, similar, it's not quite flattened and we can't really call a bottom until it has, even though it has moved up a fair bit. Costco, I'm afraid that has fallen below the support, and significantly enough that it's not going to be like this where it has a little dip below and then a V-shaped recovery. That's probably fallen below, and I'm afraid given the steepness with which that's falling, it may fall a bit more. Okay, PayPal, again, I've got a long-term hold on this, but despite it falling 77%, would you buy more? Well, this is what happens when that hasn't fallen, is that any rises become false dawns. So you read into the stochastic, it becomes a false dawn because the monthly MACD was still falling, and we'll have to keep an eye on it. Johnson & Johnson, I probably won't follow this going forward. Just looking at some of the bellwethers, probably won't follow this because even on a bull case, it's only a 12% return, so who cares? Base case, 4% is probably what it's going to return, and bear case, loss of 3%. You can see why it's so popular with so many funds. It's just a place to keep your money. It is flattening and may well give you that 12, but it's not very exciting. Katera, probably last time I look at this as well, it's fallen, as I've said in previous calls, below that support line, and that MACD looks sharp. Look at the arrows. It looks like it's going to go lower, which means the price is going to go lower. Okay, hasn't bottomed. Let's look at Halliburton. Halliburton's based somewhat. It's still in the range. I own it, and those are the kinds of returns that we were forecasting from there, which is about 81%, and it's looking good. I mean, it's on track, so no issues there. Marathon Oil seems to have fallen below that support. It's just looking like it's about to drop lower. Occidental I still own. It's holding at the support for now. worrisome. If you're risk averse, you'd get out. But if you're like me and thinking, well, I'll give it another week, let's see what happens next week. Those are the areas where, those are the kinds of returns we're looking at. Warren Buffett has that one, by the way. Devon, like Katera, fallen below support. Looks like it's going to continue lower. If you're risk averse, as I've said in previous weeks, you would already have got out a lot earlier because you've been following my recordings. Marathon Petroleum still on track, and we'll keep an eye on that, peaking. Maybe it's just a little bit slower than the other marathon, and it will eventually do that. But we're keeping an eye on it. And again, these are bellwethers on energy, just to give you an idea of what's happening with the broader market. And you can see what happens when, and this is there for illustrative purposes, what happens when things fall. That's what happens when things fall and they continue falling. We'll keep an eye on Adobe, just as I said. It's a big, important bellwether. Eli Lilly, I like. It's given about a 73% return in my son's junior ISA. That's the ideal kind of stock. Keeps within a channel. Even when the rest of the market falls, it tends not to too much. But it is still, expensive. It's toppy. We're in it for the moment. You can see what the concerns are, that it could fall there. But we're in it for the moment. Pound sterling, obviously, that was what saved my portfolio last year because it was a huge gain. And now it's coming back a bit. I don't think it'll fall back all the way down to their famous last words. But I'm just keeping an eye on it for you. United Healthcare has fallen below that, and substantially and strongly. And that looks like it's going to go lower now, I'm afraid. So I think if you're in it, as I am, and my son is in his, it's time to get out, I suspect. Okay, with that one. Just leave it at that. Campaignfor1million.com. Do have a look. Do like, subscribe, and follow for more of these. And look at the links in the bio as well for more links on free content, free videos, and make sure that you're able to get alerted when I produce these. Thank you.